Look in the mirror. That's your competition and you will definitely succeed. So friends, remember, in the end, it's you versus you.
Abundance Stock Advisors. Let's make money.
Hello friends, welcome to Abundant Stock Advisors. So if you are a serious stock market investor, think of joining our YouTube channel. Friends, it's a game changer in the stock market advisory industry. This join button is just next to the subscribe button. And to know the benefits of joining our channel, watch our channel joining video, which is coming up at the top here, and the link can also be found in the video description below. Friends, just to tell you, you can download 36 life-changing training ebooks related to overall finance and abundance categories absolutely free from our website. These books will ensure success in the three most important pillars of your life, and that is health, wealth, and relationships. The book titles and the download link can be found in the video description below. Now, before seeing this video, we would recommend you to see our video, How to Understand Charts, which is coming up here again. This video will help you understand the basics of charts, which would help you understand the concepts in this video a little better. Now, a very important topic to understand: when to sell your stocks. Let's understand it technically. Also, there's some motivation for you towards the end, so stay tuned. Now friends, when a stock moves, it leaves a trail behind, and in technical analysis, we call this as chart patterns. So if you become good at interpreting these patterns, you can easily predict the future direction and the price of a stock. So chart patterns fall in two categories. The first one is bullish patterns. These show that the stock will move up from here on, and the other one is bearish pattern, which show that the stock is going to fall from here on. So in this topic, we will study three very important bearish chart patterns, and those are head and shoulders, double top, and triple top, which means the moment you see them on a chart of a stock you are holding, you should understand that it's the time to sell this stock, since it's going to fall from here on. And also, if this stock trades in the F&O segment, it's a good time to go short. Now let's get into the details of these chart patterns one by one. So our first stock pattern is head and shoulders. Now here we get to see a head and two shoulders on the stock chart. So on the 4th July 2008, Reliance Communication showed this pattern on the chart. Let's understand this pattern in a little detail. This is the left shoulder. This is formed when a stock peaks to a point P1 and then falls from there to reach a point B1. This is the head. This is formed when the stock starts rising from the point B1, crosses the point P1 and makes a new point P2. It then falls from the new peak to create a new low point B2. And B2 is almost at the same level as B1. This is the right shoulder. This is formed on similar lines as the left shoulder. And this is called the neckline. This is formed by connecting the base of the left and the right shoulders. And finally, we see a breakout in this pattern. Friends, breakout means that one fine day, this stock gives a massive fall, closing below its neckline with massive volumes. These volumes are far higher than the usual volumes. So technically, this pattern suggests that the stock is well poised to fall from here on now, and it's a perfect time to sell the stock if you are holding it. So on the 4th July 2008, Reliance Communication was showing head and shoulder pattern and was trading at 437 rupees. It was a good time to sell it. So we calculated its target, the time frame, the stop loss, the risk to reward ratio, etc., and recommended a sell on it to our clients. The recommended selling price was 437 rupees and the expected target was 220 rupees to be achieved in 1 year. So did the stock fall as predicted? On 6th March 2009, the stock was trading at 138 rupees in a period of just 9 months. The stock had fallen around 70%. So friends, Head and Shoulders is a very reliable pattern. Our experience so far has been very good with it. It's just that it has a small problem. It's difficult to spot it on the chart. It requires some real good experience to identify it on the charts. Now let's go ahead with the second pattern, which is called double top. And let's see how this pattern helps us in selling our stocks. So now if we remove the head from the head and shoulder pattern, it becomes a double top pattern, which some analysts also refer to it as a double shoulder. So here we can see two tops getting formed in this pattern. And when the stock gives a breakout below the neckline, the stock is well prepared to fall. It's a good time to exit your position from this stock if you're holding it. Also, if this stock trades in the FNO category, then it's a good time to go short in it. So on the 13th March 2014, double top was seen in Infosys and it was trading at 840 rupees. So we calculated its target, time frame, stop loss, risk to reward ratio, and recommended a sell on the stock in the FNO category. The recommended sell price was 840 rupees and the expected target was 740 rupees to be achieved in like 2 months. So did the stock fall after we recommended it? On 30th May 2014, the stock was trading at 720 rupees. It had fallen beyond the predicted target. This pattern too is very reliable, and unlike the Head and Shoulders, it is very easy to spot it on the charts as well. Now the third pattern is triple top. Here we see 3 tops instead of the earlier 2. It's important that when a double top is formed, it gives a breakout. And if we don't get a breakout, then we have to wait for a triple top formation. So now when 3 tops are formed and the stock gives a breakout below the neckline, a triple top is formed and the stock is well poised to fall from here on. If you are holding it, it's a good time to sell the stock. So on the 4th May 2011, Rolta India was showing triple top formation on the charts. The share was trading at 132 rupees. So we calculated its target, time frame, stop loss, risk to reward ratio, etc. and recommended a sell on it to our clients. Recommended selling price was 132 and the expected target was 70 rupees to be achieved within like 8 months. Did the stock fall after recommending it? On 21st December 2011, the stock hit 54 rupees. The stock had fallen around 60%. This too is a very reliable pattern and very easy to spot in a stock chart. So friends, these chart patterns is a very beautiful and a technical way of identifying when to sell a particular stock. But you need to understand that these patterns, they just give us a direction to think. But it's not necessary that the stock would always fall as the pattern expects it to. The patterns that we have seen till now, it might happen that instead of falling, the stock might indeed start rising. That's quite possible. Had that not been the case, then every investor would have become super rich by mastering these patterns. But that doesn't happen. So friends, when Abundant Stock Advisors we recommend a stock, identifying a pattern is just our first step towards analyzing a stock. After this, we study and research a lot of other technical parameters about the stock. We also study the stock fundamentally, and then we make a well-calculated decision. So friends, you need to be an expert at this. Your experience, your judgment, your timing of studying the stock, the overall health of the economy and the corresponding sector, obviously, the current market situation, etc., they play a very key role. So we are confident from today that in the coming times, you are all set to become a shrewd money-making investor. With this topic, you have just made a very good start. Now some motivation. Look in the mirror. That's your competition. Friends, you are your only competition. There are no others. Just observe everything that happens to you ultimately you feel inside you, right? You get fearful of investing, you feel excited to invest. It all happens inside you. So your real competition is within yourself. Every day try to be a better and a stronger investor than what you were yesterday, and you will definitely succeed. So friends, remember, in the end, it's you versus you. Friends, just to remind you again, there are those 36 life-changing training ebooks waiting to be downloaded absolutely free from our website. The book titles and the download link can be found in the video description below. For many such amazing videos, please subscribe to our channel and hit the bell icon. If this video has added value in your life, please like and share. If you have any questions, do let us know in the comment section and we would surely reply. Until then, happy investing and Jai Hind.